Welcome to another episode of Converge. I am delighted today to have Kimberly Ofori joining us from the Netherlands. Kimberly is an exciting new voice in fintech, and I'm excited to share her story with our audiences today. Kimberly, welcome. You're joining us from Amsterdam, is that right?
That's right. And thank you so much for having me, Alex.
Yeah, it's great to be here with you. We didn't catch you at Money 2020, but I heard a lot about your discussion and wanted to bring you on the show to talk about the idea of camels versus unicorns in the fintech landscape and why camels are getting more and more attention these days. But before we get into that, can you give us a little introduction about yourself, your background, your sort of position in this space, what brought you to fintech, and some of the current companies that you work for and the company that you founded, in fact?
Right. So I actually made quite a few full circle. I started my career in banking and insurance at a very young age. I started in the insurance industry, actually, life insurance and pension planning. Then went on to work with banks, doing investment banking, private banking in the Netherlands. And then I shifted a bit. I moved to the Middle East. That's where I got into consultancy, really in the oil and gas industry. So I completely shifted directions, really. Really interesting time, high pace, really high growth environment for me as well. And it was also there in the Middle East that I really kind of got into the field of innovation and what was possible with technology and kind of how governments were leveraging technology. And obviously, in the Middle East, especially in the UAE at the time, there was a lot of innovation happening in the fintech space. And even though I was in the oil and gas industry, I saw that the banks were really heavily testing new ways to innovate already, working together with startups and emerging technology. Even before some of the banks in the States were even considering doing that. So there was a lot of high risk, high reward situations going on there that really got the ball rolling for me to kind of, yeah, keep an eye on fintech. However, I really didn't dive into it at that time yet. I moved to Spain after some time, after living in the Middle East, founded my first technology company, a software company that I sold. And then I went on to build a few other platforms in different industries. I was never really hooked to one particular industry. I just saw a lot of business opportunities that perhaps resonated with me, and tried to see if technology could bring a solution to that industry or sector. Some successful, some were not. So I eventually sold two of my companies. And then I got into consultancy for myself, which is what I still do to this day. It's been almost 7 years, consulting mostly startups and scale ups, as we call them in Europe, where that are using technology and leveraging technology to make impact as well. And this could be in any industry, really. But I started focusing a lot on fintech when I got into the African market. In Africa, fintech was booming at the time, still is, but it was really up and coming when we're getting like the really, the payment portals and really building those infrastructure platforms in Africa. That was the time for me to kind of dive in and help these companies with their scaling questions and scaling operations and going international, and being very strategic about the approach that they're taking. And so fintech became a large part of my portfolio in terms of who I was serving in consultancy and strategy. And with that startup and scale up environment also comes venture funding as well, right? So I started to dive a bit deeper into how can we get more of these companies to get funding, because it was such a wild west at the time, where wild west where we had a lot of innovation happening on the African continent, but it wasn't very transparent, and it was very difficult to really kind of nurture where things were going. A lot of innovations were being bought up very early on before they were matured, then kind of built out and scaled outside of the continent. So I built a platform where companies on the African continent could find their key partners to build and scale their fintech solutions, and also agritech actually, on the continent, build it for Africans by Africans first. And if that is then also something that can be exported to other economies, then that's a great plus. But I was really looking to find how can we attract capital to the African continent or release some of the capital that was already there by making it a more transparent marketplace. So this around 2019, I stepped out of that platform, started doing more consultancy work, and for the past few years, what I've really been focusing on is trying to change how we're building companies and why. So I think the kind of the cowboy era of just building anything because technology can, we're kind of shifting out of that a bit, and people are like, okay, we get it, we can build anything. Um, and also, even though AI has kind of brought that momentum back and everybody's kind of building everything again, trying to see what will stick and what will work, you do see that people are being more meaningful about it.
Yeah.
As well as investors are asking more critical questions about, hey, cool that you built this thing, but what are we going to use it for? And are we going to be using this in the next 15 to 20 years? Or is this just a nice to have because TikTok says that it's nice? So all
Yeah.
of these questions that kind of I'm looking to answer with the kind of companies that we're building today has caused me to shift more towards building impactful companies. I call them camels or zebras, but we'll have a conversation about that later. That can really stand the test of time and also leave a legacy behind them.
That's a really rich background, and thanks for sharing. You obviously have great on the ground, hands-on experience as a founder, which lends your expertise to now consulting with founders, and of course the work you're doing on the African continent. We've spoken with our friend Mickey, of course, as you know, and also Benjamin Fernandez of Nala about building payment infrastructures on that continent. And it's such a relevant and important topic given the growth in that region. And I'm excited to dig in some more to see how you're contributing there. But first, let's talk about what you said there. The idea of these camels or zebras versus the unicorns, which were the obsession, the latter being the obsession over the last decade in the VC space. What is the concept of profitable? First of all, what is a camel? What is a zebra? We all know what a unicorn is in the VC space. And can you explain the concept of profitable camels and what sparked this shift in the investment landscape that we've seen, let's say, in the last, I don't know, year or two?
Right. So, contrary to the kind of idea of a unicorn, which is very mystical, it's something that we can't really explain yet. We don't really know, we don't have an exact roadmap to unicorns. We just know that some things tend to work and sometimes they don't. And unicorns come and go, they appear and disappear. So, there's a lot of kind of mystery around how long it's going to take to get there, how long you're going to exist, and how successful you're going to be, which is very speculative. Obviously, it's great when you have a few of these companies that do well, transform industries, and really kind of build momentum for what else is out there in a certain industry or market. But you can't build economies on this. We can't build economies and you know um, industries on things that we cannot predict very well. It just doesn't work, and we need to have some kind of structure and very kind of foundational organizations still who that we can fall back on, that are providing us with the basic needs and services that we require to exist as a society. And this is where camels usually come in. Camels are, the description of a camel really comes from the idea that, they're usually found in very harsh conditions, in the desert, extreme cold, extreme heat. And they were built to exist in that space, right? They have humps that have reservoirs for water, which kind of translates to, how are you managing your financials? Do you have enough cash flow and kind of backup reserves for you to sustain yourself for longer periods of time in harsh conditions? Is that built into your business models? Is that built into your organizational structure? Another thing with camels is that there seem to be kind of really clumsy and slow, but they're actually incredibly smart and fast when they want to be and when it's necessary. So they can take sprints like you haven't seen before, right? They can go really fast, but they make very calculated decisions as to when they're going to be doing that. So they're not sprinting the whole time. right? They sprint when it matters. They sprint when it requires them to do so to kind of get ahead. So that's another thing. That's a kind of a really distinct thing that you can recognize with camel organizations. They take calculated risk, and therefore they're able to also make longer distances. So that's kind of the last one. So if we're talking about building a sustainable business in my term book, that means that you're building a company that can last. It's not just sustainability in terms of kind of the resources that you're using or not using, but also on, is this something that has a foundation to last, a few decades from now? Is it still going to be able to exist? Are you still relevant? So are you building something that in a market that is actually growing and will be growing and maturing over time? So these are some of kind of the most recognizable things about camels. And we also have zebras and you also have gazelles, but I'll zoom into the zebras where similarly to camels, they are looking to be profitable, but they also connect their profit and their growth with purpose. And so these are usually companies that have a really high and almost an activist voice when they speak about what they stand for and what they believe in and why they exist. It can be something that has to do with climate. It can be something that has to do with social inequality. It can be something that they're looking to really make their mission to equalize or better. And so zebras are organizations that, contrary to nonprofit organizations, are taking a cause very seriously, fighting for that cause, and doing that by building very profitable businesses.
I, First of all, do you have a degree in zoology? Because I was very impressed by your knowledge of camels. And also, I want to ask, the zebra name is particularly well selected because I think it sort of speaks to how there are companies who obviously have similarities with camels, but they also sort of show their stripes, so to speak, in terms of
Exactly.
the purpose. And I'm assuming that's how that name
I
came
like that you
about.
caught that.
Yeah, it's very clever. I really love it. So, why do you think, I guess, why is the future of Europe's technology more now in the hands of these successful camels, these strategic camels, rather than the unicorns? And, what sparked that shift, and why is it that the camel is now in the spotlight? What led us here?
Um, yeah. So the funny thing is, Europe traditionally and historically has been a continent of camels. So building
Hmm.
companies that are not very flashy, that
Yeah.
last for decades or centuries even, has been the thing that Europeans do. They're not highly innovative, also, usually, or if they adapt innovation, they're usually a little bit slower. They take a lot of time. Europe and legislation as well. So
Yeah.
even
Yeah.
if you want to go fast, you usually can't. So European companies actually have always been
Yeah.
kind of camels. However, we just haven't called it that. We've called it, traditional business or SMEs. But what it really is that the climate, we are now finding out that the climate in Europe is so different from, let's say, the United States.
Silicon
Um,
Valley. Yeah.
and Silicon Valley particularly, that you can almost not afford to bet all your money on building unicorns. Our
Yep.
infrastructure is just not set up that way. And the question that a lot of countries are asking is, should we want it to be? Because being highly disruptive, what I think a lot of people forget, even comparing the United States to an entire continent is strange to me, right?
Yeah.
Because we have 44 sovereign states, call them countries. They all have their own economies. They all have their own infrastructures. They all have their own resources and battles. Even though the United States has different states, it's still one kind of, call it one country.
Yep.
And so there's a huge difference in how fast you can go, what risks you can take, but also who it benefits, right? So, I can drive from the Netherlands 4 hours straight and be in another country. And that doesn't even speak any language that I speak, right? It's completely different economy. The temperature, the climate is different, and that's 4 hours away. Where they may not. I mean, I've lived in Spain, as I said, And the contrast was huge, right? Would have to go and do everything by paper in one municipality, and when I was living in the UAE, I had an e-passport, right? So it's all of these kind of different innovation levels that you have to consider. So, coming back to your question, for Europe, I think it makes more sense to double down on how we're building these sustainable companies now, looking to the future, versus kind of changing everything and trying to mimic Silicon Valley because it looks so cool. And a lot of the governments are, a lot of countries are asking themselves that question, like, what are our unique resources? What are we uniquely good at to kind of contribute to the entire, let's say, continent, the European Union? And you're finding out that, for instance, in the Netherlands, we've always been a very knowledge based economy. So we export knowledge. We don't have a lot of natural resources. We have only 18 million people in the entire country, right? So there's only so much you would think we can do. But what we became really successful on is exporting the knowledge that we had to build around, for instance, our urban planning. And because we are living under the sea level, we have exported a lot of information on how to manage borders. And these are all kinds of things that we have built sustainable businesses on that are not very flashy. They're usually not highly innovative in a short space of time, but they have been groundbreaking innovations that last us lifetimes. So, coming back to why I think the future will still be in the hands of camels really has to do with what fits the European continent, right? And so the camels are those companies that can sustain the economy while we're still innovating. I don't think we're ever going to be the continent that is going to be um, disrupting every industry, especially in fintech with all the legislation and kind of different legislation 4 hours away from you. So what you're going to have to do is really focus on, okay, what can we build that is so strong, that will sustain us throughout the next 10 years, that we're still be able to innovate on, but it doesn't have to be as fast. So like the Revoluts and the Klarnas and the kind of those the Adyens and the TransferWises, right? These are companies that have brought neo banking and digital banking to a new era, and it fits kind of the European level of innovation. Like they're not doing something entirely new, but they're building on a new infrastructure that could work across different countries within the continent.
Yeah, that's a great background on sort of the European lens on this the growth in technology. And if we zoom in further in fintech, it's Revolut is a great example. Obviously, they've been around. What is it? I don't know, 10 years or so, and they've obviously seen a huge amount of growth in the last couple of years. But I'm really curious about camels still want to be global businesses in many instances. They're not just dealing with the EU. They want to go global. And Revolut, for example, I signed up for their U.S. card recently, the U.S. account, and I'm on a wait list. I can't get on it. So the growth comes, the lack of growth is definitely a challenge when you're expanding and competing with a big crowded space. So how do camels get an edge in the global growth market? And specifically, let's talk about fintech compared to those companies that are really seeking scale at all costs. I mean, you mentioned the strategic foundation, sort of carrying them, working through for the long haul, playing for the long game. All of that is very smart strategy. And I think all great leaders, no matter which company, which continent you're on, would agree with that. But how do camels in Europe think about that competitive global growth with sort of the companies that are in other continents like the US or North America, where break things and move fast is sort of the mantra to get ahead?
Yeah, I do think that this is where camels and their mindset differ a lot from, like you said, the scaling at all costs, where scaling internationally is optional.
Yeah.
It's no longer something that's required for you to consider yourself to grow. So what you see happening is they will probably first deepen their penetration in markets before they even consider expanding with their existing kind of portfolio. So the question for camels usually first becomes, what does growth and skill look like to us? And that's kind of the direction that I think a lot of camels will take even before they consider scaling internationally. And then and this is also why I said it's a mindset differentiation, because when you see growth and scaling as conquering different continents, then you are going to break things, and you're going right, and that's fine. But I think that it just requires you to be a different organization if you want to do it fast. So the camels that are scaling internationally, they're, like you said, they're tiptoeing into it, right? So they're saying, okay, let's start with a wait list, and then when we have enough
Yeah.
traction, we're going to start with one product, or we're going to start
Yeah.
with one kind of really small jurisdiction. And I think that for camels to try to do it I'm just going to call it, let's say, the unicorn track way, is going to unnecessarily destabilize your kind of structure. I think that there is a way for some of the camels to do that, is when they build a completely different entity, right? So they have a product that they know is highly scalable, they know would work in different markets, or maybe work even better in another market, and they just create a completely different entity for that. And they say, we're going to launch this in the States because this product would fly high in the United States, while it still kind of contributes to our overall purpose and overall kind of focus of what we're looking to bring. And so they may choose to kind of bring very niche products to different markets. So that's a way to kind of expand really quite quickly and rapidly without kind of breaking your kind of foundation of
Yeah.
what you've built so far. So you do see some of the camels saying, we're going to kind of strategically build out some of our portfolio companies to be able to scale under either a separate brand or just kind of as a small part of our portfolio.
Yeah, yeah, absolutely, and I've definitely seen those examples out there in our industry. Let's talk a little bit about these zebras. Obviously, fascinating animals, and in the scope of innovation, a purpose-driven camel is certainly something that stands out and catches a lot of attention. Um, why is it so important for startups to balance purpose with profit? I mean, it seems like an obvious answer, but especially in fintech. And one of the, I'll say as a background, we hear a lot about purpose-driven fintechs trying to democratize this and that because access to financial services is limited across the world in so many regions. And that word democratize has become attached to a lot of fintechs' mission statement. I think I read that there's 400 plus fintechs who have that as some part of their marketing and purpose jargon. So, what really what really should fintechs focus on when it comes to purpose in this space? And how can they differentiate themselves and not just be another, we're democratizing this company? Speak a little bit about your experience working, consulting with zebras, and what you tell them to sort of to help them stand out amidst this, growing sea of everyone trying to differentiate in this area.
Right. I think it really comes down to the tech part of the word fintech. And that is kind of choosing very carefully, knowing very well, more than anyone else in your industry, what your technology could also be applied for and applied to. And what I mean with that is, we saw this especially during Corona times, where you had companies being built or already existing organizations really good at what they were doing, democratizing spaces. And then Corona came, and all of a sudden they found this really cool new ways to apply the technology that they thought could only do one thing, but was really also very beneficial for an entirely different market or industry, or maybe for the government, right? And now they became change agents in completely different industries. And so, what I mean when I say know your technology better than anyone else, it's trying to be curious about what the tech that you are building would look like in the next 10 years from now, and start making a roadmap towards that. We've seen it with kind of data analytics going into machine learning. Now we're talking about Gen AI, right? We knew 20 years ago that data, we would be able to automate data and the analysis from that and do something with it. I think 20, 30, 40 years ago. We knew that already. The smart companies differentiated by already building product lines that could play into that and say, hey, Gen AI is the new flashy thing, but technology is always going to be evolving. So you're always going to be able to build on that. So for Camels and Zebras, it's going to be incredibly important to not only differentiate in how you're making access possible, but also what you can apply the technology for that you've built. A lot of the times you underestimate kind of the power and the value of what you've built. If it's disruptive, you can probably disrupt many more industries. You can probably also disrupt many different sectors, and you can reach a completely different kind of um, uh, um, target audience who wasn't even looking to kind of use your products or services, let's say the government. And I think that differentiating yourself based on being kind of your industry, being the go-to person in a certain industry. Let's say if you're into microchips and all of these things, it's something that will last you. Oh, it will probably be part of your strategy anyway, but it will last you in the long run when it comes to differentiating, because people will see you as the expert in the field. They will not only come to you for the products that you have now, but also looking to what could possibly be happening in the future.
Mhm. Yeah, it's a great way of putting it. I think obviously camels and zebras obviously have resilience, as you mentioned, sort of built into their business model. Is it Do they cultivate that resilience through, obviously, since they're not really moving as fast as unicorns in certain areas of testing and pushing things to market? How do they call how as a from the camel zebra perspective, how do you cultivate resilience through failing forward, or are there other ways to sort of build that resilience into your camel unicorn business inevitably, for the inevitable bumps ahead? And what do these types of how do these types of companies um, you know grow beyond the hype of the industry to really help do impactful things and sustain companies? Can you give us some examples of a zebra that has really built resilience and had that kind of really sustainable success, and how they that got to that point? Was it through setbacks? Was it through really knowing how to approach building their business in that way from the outset, having learned from prior companies? Like, what are some examples of zebra or camel success that illustrate some of the points we've been discussing?
Right. Did you have you seen the research come across about the most successful companies are actually being run by people in their 40s, founders in their 40s who have like a career
I would
behind them?
believe it. Yeah, I would
Yeah,
believe it.
yeah. There's been tons of research coming out. I think 2023 to now that
Yeah,
showcases that something that obviously when you hear it, it sounds logical, but
yeah,
when you look at kind of who the poster child is for kind of all of the startups, that doesn't show the same image.
yeah,
But what you do
yeah,
see that statistics show that the most successful companies have founders who have either already built a company before or have had a successful career in the industry that they're now building a startup, and they're usually in their mid 40s. With that number, it kind of goes to answer your question. Um, Usually, camels are built to be that from the offset. So they don't accidentally become a camel because they couldn't raise funding or because it was hard in the beginning. They're just like, you know what, we're going to take things slower. Usually, the idea was always to build something to last and wasn't necessarily built for a quick exit in the first place. So that changes kind of the order of things, right? So you're not going to just build an MVP to raise funding, or you're building an MVP so that you can see if people will pay for it, right? So it's a completely different direction you're taking. So now you're actually looking to get traction first. Now you're looking to get your first sales in first. This requires a completely different skill set from the founders and also the team. The kind of team that you're building is usually going to be maybe one tech guy if you're not a technical founder, but a lot of salespeople, right? Versus hiring very expensive engineers with the first build 1 million you're
yeah.
getting, that's going to last you for a few months.
Sure.
Um, and then hoping somebody buys it, right? So you're kind of taking two completely different routes from the offset. So that's one. And then what you find out is that these camels and zebras, they are hyper focused on building one really good product or service. So they don't kind of let go of that first initial product until they're entirely sure that that one product could sustain the business. Like even if all the other products that they're going to release afterwards fail, this one thing is going to keep them dominant in the market and secure them. And so what you find out is that that also comes a little bit from having career experience, where you know that when you were
Yeah.
younger, you were going to try different things, you thought you could take on the world. And that's usually what you see in very early stage founders who are doing it the first time. You're doing too much at the same
Yeah.
time, right? And
Yeah.
probably trying to do everything at the same time. And I will be the last person to tell any founder that they can't do anything. It's just that you probably can't do it at the same time. I do believe anybody can achieve anything, but you need to kind of find a way to organize what you're doing first. And you'll see that with Camels as well, that when they go for funding, because they're not against venture capital, it's just that they wait a longer time if they do find it necessary, and they're very strategic about why. So what you're seeing in the market now, especially during the COVID pandemic, is that a lot of VCs had to start asking their portfolio companies, "Hey, by the way, did we see your spending plan?" Right? And if they didn't, they're now asking for it. And the reason was because they saw those camels still standing, and they were able to spend comfortably, had a quite a comfortable runway still, even though they didn't get new injections. And what you find out is that the spending plans of camels are differ so greatly. They are not based on hypes or momentum. They are built out month by month, like an actual company does, right? Budgeting and staying within budgets. And obviously, you can splurge, and there are emergencies, but even that is something that you have pre-calculated. So this really goes to show that when it comes to building a camel or a zebra, usually you find those that have done that successfully over time. They built it with the intention to build that kind of animal. There is a way to get into it, obviously, afterwards, but it's going to require you to be completely different, to take on a completely different strategy. Usually that requires different leadership. So I help a lot of organizations make that transition as well. And where you see that the founders were able to really rapidly scale a certain product or bring a product to market successfully. That's what they're really good at. They're just not good at holding that position. And that's the kind of moment where you can see CEO shift, trading places, or the CEO becoming the CMO, because he is really good at kind of that part and attracting somebody who has that longer term vision. So that's also a solution for some of the companies, especially in the dry season, in the winter that we saw recently, right? Where it was incredibly hard to attract funding unless you could show a healthy roadmap to profitability. And if you're not the person to be able to do that, that's fine. A lot of the times you can attract somebody who does have that kind of longer breath, so that you can be building all of those kind of really cool new innovations that can go to market at a set time while you're building a solid infrastructure.
Yeah, really great advice there. I don't want to push the unicorns too far out of the room, so let's put the spotlight on them just for another minute here,
Yeah.
because obviously there's some people and some founders out there who really attach themselves and identify with this sort of the rapid growth, mentality, and they're really looking to move fast and disrupt a space. Let's give them a second here. How can investors and entrepreneurs balance that pursuit of rapid growth with the need for sustainability and resilience? Can they be complementary? Can the unicorn really exist, incorporating some of the same success strategies as the camels and the zebras? Can the unicorn really do some good, some growth roadmap that really makes sense for their business, and know that they're going to go out there and give it their best shot without sort of breaking and coming into a lot of the issues the recent unicorns have, where they're overvalued, they end up not living up to the founders or investors' expectations? What can unicorns do these days? I mean, we don't want to throw them in the garbage can. What does their future look like?
I honestly believe that we can have healthier unicorns. I think on both sides it will require some adjusting. We have had very spoiled investors that I'm part of the ecosystem, so not shading anyone. That we've asked for hyper growth numbers and big promises and kind of inflated a lot of things to look good on paper so that we can kind of justify some of the uninformed decisions we were making. That's going to have to change because founders are really only doing that on their terms because that's what we're asking them to do. So that's one side. Once that pressure is off, I think you will find that most founders will want to do things, build things, and communicate things more realistically. So when you feel like you should be doing something in 10 years and you don't have to promise that you're doing it in 7, that helps because that's going to kind of open up the space for you to actually build it that way. And I think
Rest off
that
their shoulders. Yeah.
exactly. So I think that, if once that pressure kind of gets removed from that angle, you will release a completely different kind of roadmap towards getting that unicorn status. And then we have a conversation, I think, also about what is a unicorn. Is it a unicorn because you reached it in 7 years or less? Or is it a unicorn because you got that $1 billion valuation realistically? And you're still standing after kind of IPO. There's a lot of things that we can kind of change in that narrative to kind of steer it to be a healthier thing because you also see that nobody is getting happier with the crazy amount of loss that's happening after IPO, right? You see that most unicorns 5 years after IPO are either not profitable still or making a loss. And even though you could have had a quick cash out, for a lot of investors who are sticking in or staying in the long game, or just for the founders, you don't wish that on anyone to have kind of that continued stress and distressed organizations. Because then what was it all for? At the end of the day, yes, it's a game, it's fun until it's not. And I think that we can still combine the two, where it's super exciting to help founders build amazing solutions, and at the same time, let's encourage each other to do that in a way that it can last so that you can look back 10, 20, 30 years and say, so I contributed to this. I'm talking as a VC now, right? And on the other hand, you have the founders who are now able to say, hey, I did exit, but I left something significantly bigger than I started off with. And it's probably going to last and make an impact long after I'm gone. And it may sound idealistic, but I think that a lot of founders that I've spoken to that have built companies that no longer exist wished that they had taken a little bit more time, even though the paycheck is nice, to build something that still existed after they were gone.
I'm sure. Yeah. Yeah. Great to know that in retrospect. But also, it's a coulda, shoulda, woulda, but ultimately it's a learning experience that I'm sure they benefited from and took them further heights in their career. So just to close things out, I want to focus in on the payments industry. Obviously, payments has had a lot of innovation and still has a lot of innovation ahead of it. With regards to the fintechs, camels and zebras and unicorns, if we focus on the camels and zebras that have been building in the payment space specifically, are there innovations in this space that you believe will be crucial as a part of that sustainable growth ethos in this industry? I mean, I think of course, the growth over the last decade of, for example, the blockchain and digital assets industry. Some have moved very fast to their proof of concept. Others have been around for a decade plus, but many in this space, far less than a decade. So what do you think are sort of the mindsets of some of these newer payment companies in terms of how they're looking at growth in this next 5 to 10 years, where we're obviously going to see quite a few changes in the digitization of money, the transfer of value. We have technology now that really is actually changing the way that value can be moved around the world in meaningful ways. and it's a system that has been in place for so many decades that it's taken time and a very steady march to disrupt it. So what's your view on that steady march going forward and the technologies that you think will be sort of part of sustainable growth in payments?
Yeah, I think firstly, we're going to see a trend of a lot of consolidation happening between kind of the bigger fintechs that have been here for some time and newer innovations. Um, I think that's going to bring forth it's going to make the market less saturated with products and solutions that maybe have one beneficial feature versus kind of having a very robust infrastructure that can be built on. I think once we move, simultaneously, what I see happening is the innovation that actually surprises me is the fintech market working together with the traditional banking systems, right? And it's interesting to see now, especially in the Netherlands, we have some of the banks that who have formed a coalition to really work with the blockchain, right? And kind of let's take tokenization. It's something that some of the banks that are also my clients have started to kind of tokenize products and services and kind of resources for their customers, and putting that on the blockchain and doing those transactions tokenized, right? And I was part of some of the pilots that were being done recently, where you can really see that there's the momentum kind of feels like that of a camel, where you wish it would go faster, but you understand that it needs to be done right so it doesn't break. And this is kind of what you're seeing. So if I would say anything with your example, I think working together with kind of traditional markets and kind of the up and coming markets and emerging technology, consolidating some of these initiatives is probably going to be the most sustainable way towards the future. Because yes, traditional banks are old and slow and all of these things, but we still need them for now. And they still have most of the money and the infrastructure and the means to move and push things along. So the emerging tech and uptake of that is we're going to have to work together in that space. So I'm really excited about kind of what tokenization can do for
Yeah.
the fintech industry. And that's
Yeah.
also going to be sustainable because we're only going to see more of that in the future.
Yeah, I couldn't agree more. I think we discussed this a lot at Money 2020 with several guests on the show, that we're at this inflection point where tokenization has the capability to really turn on for financial services in meaningful ways and provide immediate value in several areas of the financial sector and financial services. So it's exciting to see that we're at a point now where these camels who've been building in that space will begin to flourish and enact meaningful change. And I think obviously regulatory challenges have been a big blocker. When you think about giving advice around regulations, obviously you spoke of the EU. You're such a conglomerate of different countries with different regulations. What regulatory challenges do Camels and Zebras face when they're building more specifically for EU, and how can they leverage the regulatory changes or differences as opportunities rather than barriers to their value proposition, close to their value proposition?
Yeah, I have to be honest. It's quite complex, and it really differs even in what focus you have, even in the fintech space. Because if there's one thing that's heavily regulated in the EU, it is finance, more so than probably. Yeah, I think healthcare and finance; those two things heavily regulated, even to the point where people in the regulation system don't understand it anymore, right? So we do have opportunity there, because one of the things that I found to be an advantage for those who are looking to scale internationally is that once you have mastered kind of the infrastructure and ways of how to comply with different jurisdictions in different contexts, it only becomes easier to scale internationally with less restriction, right? Because
Yeah.
compliance is probably not going to be your biggest problem. And
Yeah.
that's something that for a finance product is really nice to have when you are usually compliant to wherever you're going. you're also way more prepared for surprises. Like, in the Netherlands, you need to have huge amounts of reserves just in case you make a mistake and you have to kind of reimburse your business clients. B2B damages are not a few thousands, right? So you're going to have a lot of reserves there. So that also helps you to be prepared when you're going to scale. So that whatever happens, you're ready to kind of move in different ways. So I think I don't, if you're going to push for calling it opportunities, it will probably be that you will be over prepared at scale. I don't think, I do think that we need to have a serious conversation on how restrictive the regulation is, especially because we do have a lot of old legislation that simply just hasn't changed and evolved with time, yet we're adding new stuff to it, right? So we're probably going to have a really serious look in the coming years on, what do we want? Do we want to be kind of the continent that will later apply things that have been tested abroad and so all have been de-risked so that we are able to use it here? That could be a choice. It could be a choice, but that would mean that for a lot of companies, and this is happening a little bit, especially in the Netherlands, they're going to build their companies outside of the EU first. And then once they've kind of de-risked the product and they found a way to scale that, they bring it back to Europe and kind of then bring the de-risked product to market here. It's something that Europe could decide to do. It's something that a Camel could decide to do. I think that in the end, it's part of entrepreneurship to be very inventive about how you're going to kind of navigate these different structures. Where we have a few big markets here, but Europe is still like pin size to a lot of other markets. So I think when you're looking to scale, go where the opportunities lie, but leverage what you can learn from the restrictions that you have here.
I think that's a perfect note to close out on. Hearing about camels, zebras, and the fact that they're having their day in the sun makes me very happy, and I'm glad that you came to share your expertise on these animals out in the fintech world. They're making significant strides and showing their stripes in beautiful ways. So. Thank you, Kimberly, for illuminating this concept for us about the camels and zebras. And we'll still celebrate the unicorns alongside them, the successful ones, and encourage, an innovative mindset, a growth mindset with responsible innovation. I think is the secret sauce. So, Kimberly, it was so good talking to you. Thanks for joining us today, and we'll hope to get you back in the near future.
Thank you, Alex.